It's ETM effects. I'm going to go over the only strategy you should focus on while you're a beginner. So to add context to this strategy, we're going to use our weekly bullish candle as an example. So here we have our weekly bullish candle. Here we have our price open. So this would be our Sunday and Monday is when the weekly candle opens. Here we have our wick, which would be the low of the week. And here we have our body, which is this entire thing. And this would be our expansion. So this strategy consists of three phases. Consists of accumulation, manipulation, then distribution. And why is this strategy powerful? It's because as a beginner, you're not really practicing more for a, let's say, an accuracy based strategy. You're looking more for a high risk to reward because that would be the safer option as a beginner. And it'll be a lot easier to learn. And in this strategy, we'll focus on trading in the manipulation, which would be the low of the week, or let's say if this was a bearish candle, vice versa, it would be the high of the week. You would have a small risk compared to a high reward. So here is our weekly candle in daily increments. So what happened here was we had our weekly open, our Sunday and Monday. Price was bullish. Tuesday was bullish. Wednesday bearish. Thursday bullish, bullish. So, and it doesn't matter which format that happens to. We're mostly really focused on Sunday and Monday, Tuesday and Wednesday. And we count for our expansion to be Thursday and Friday. So what happened here? On Wednesday, price came down and took our previous weekly low. It trapped all the sellers, everybody that insinuated that price would drop down, to later on Thursday and Friday to finish price above and break the weekly high. So this campaign here is really just one weekly candle. So what we focus on is an accumulation phase of Monday and Tuesday. And an accumulation, what people have wrong is an accumulation doesn't really have to be uh sideways. It doesn't have to always be sideways. It could be an ascending accumulation, it could be a descending accumulation, and it can be a stationary accumulation. So there's three types. So price accumulated, price was racking up orders for later on price to trap the sellers to later on continue to a bullish momentum. So what we focus on is to trade on a Wednesday during the accumulation. What is the accumulation? The wick of the weekly candle. So while the accumulation is occurring on a Wednesday, we're looking to get in right here to take advantage of the small risk in comparison to the huge reward. First thing you want to do is locate Mondays and Tuesdays high and low. So this is Mondays and Tuesday high, and this is Mondays and Tuesdays low. So what occurred in those last 2 days? It was a descending accumulation. Before that, it was a bullish market momentum. So what is happening here? We're looking for price to take out Mondays and Tuesdays low, to trap the sellers, to continue bullish. The trap occurred, and where do you get in the entry? So once price takes out Mondays and Tuesdays low, you're looking for the first resistance, which would be right above the base that caused the trap. And your target would be the first level of liquidity. So once price trapped the sellers here, you would get in a buy once price reaches this level right here. Once price reaches this level, you want to get into a buy. But in this instance, price failed and you take a loss. So what do you do here? Just because you took a 16 pip loss, it's almost 17. So 17. So you took a 17 pip loss right here. So what do? You still get back and continue with your plan. Why? Because you still know the market is in a manipulation phase. And what do? We trade manipulations. So once price gets above this level right here, once price gets above this level, we get in a buy. And whatever low it formed, So even if it's something like this, whatever low it formed right before reaching this level would be your stop loss. So let's see. Okay, so price reached this level. What do? You put your stop loss right here as you get in the trade, and your first target is right here. Your second target would be the 50% in between your two targets, which would be right here. And your last target would be right there. But for simple purposes, let's just focus on our first target. How many pips did you back? 55. You might be negative 17, but you're 55 positive. So what I'm saying is a loss shouldn't change your game plan. Following this type of strategy, which is perfect for beginners, you will have a few losses, but your wins will always overshadow your losses. So as you can see, to make this even more clear, price did what? Price trapped the sellers to go bullish. So here we have another example. Here we have our Mondays and Tuesdays high and low. Price came back and took Mondays and Tuesdays low. So what can you do here? Once price takes this portion out, you can get in a trade right here. Once price gets out the range and comes back in a trade right here with your stop loss right at that low that caused it. And your target would obviously be the liquidity here or the entire range, whatever you prefer. Or you can have a safer option, which would be trading the last significant resistance level. But if you take an entry right here and your stop loss right here, this just defeats the purpose. To be honest, it's not an efficient trade just for the risk to reward. And the reason I would consider this strategy perfect for beginners is because you trade once a week, and what trading once a week does is it trains your patience. That's the most important thing when it comes to a trader, and it has a great risk to reward. It's safe and teaches patience. But in this instance right here, it's no longer safe just because of how big the risk is. So the only way I would take this trade is would be once it comes back in the range. And what occurred here? Price did what? Trap the sellers, took out Mondays and Tuesdays low to later on do what? Finish above the high. So after practicing and trading this strategy for a few months, if you want to integrate an advanced technique as far as entry goes, here's one. We're not going to go in too deep. I'm going to make a completely separate lesson for this. But so price takes out Mondays and Tuesdays low. And we're waiting for price to get back in the range. So now price got back in the range. So as price got back in the range, we're going to pull out our fib. And we're going to wait for a 50% retrace. We're waiting for price to come back where? Back to fair price. Preferably, you would want price to do what? Get back. You would want price to get back to the discount level and get a purchase at discount. But a lot of times it doesn't dig that deep. And if it does dig that deep, it more than likely will fail your entry. So you'd want price to get into the 50% to take a bounce trade from right here and still maintain the same targets. Just like that. And this would be like more of an advanced. There's plenty of ways. There's this technique right here, and then there's another technique where you trade a trap inside of a trap. So you wait for another micro trap to occur at a lower time frame within the initial macro trap, and then you got the 50% retracement, and you have a FTC momentum. So there's a few ways to add another caliber of an advanced technique within this strategy. But for right now, just focus on the beginner strategy, and in the next few lessons, I'll cover how to add more layers to the strategy. Make sure you like and subscribe.